Okay, guys, I'm going to talk through the Bitcoin chart with you, and I just want you to approach this with a completely open mind. And I'm going to explain to you how this chart is looking from a scientific, technical point of view, without any bias, without any preconceptions, without any stories or any narratives. Okay, and I hope you appreciate this because I'm not trying to, spoil anyone's party here. I'm not trying to be a party pooper. I'm not against Bitcoin. I'm not. I'm trying to explain to you. I'm a nice guy, okay? I'm not trying to spoil your day, and I'm not being vindictive. I'm not being stupid. I'm not being all the things that I'm being accused of on X at the moment. I keep wanting to say Twitter, but of course it's not Twitter anymore. I am trying my best to present the data and present the information to you in a completely unbiased way. So please just watch the following short video and read this article, and just bear it in mind when you're approaching your investments, whether it's Bitcoin, whether it's precious metals, whether it's the stock market, whatever it happens to be, because these are the techniques that have to be used on every investment, regardless of what it is. So thanks for giving me the time to explain this to you. I'm just going to share my screen with you now. Okay, so the screen sharing is switched on. Okay, this is the Bitcoin chart, and this is what I want to talk through with you, okay? I haven't put any lines on this chart yet at all. There's no lines on it, so I'm not showing any of my bias whatsoever. I'm just going to make some initial scientific observations. When I say scientific, what I'm talking about is really, I'm sticking to facts here, okay? So Bitcoin was launched and its value was essentially zero, okay? So when you start at zero and there's a rapid uptake in whatever it happens to be, it can be a stock, a share, it can be an IPO, it can be anything, doesn't matter what it is, something that's released newly onto the market, it can and often does rise by thousands and thousands of percent because it's starting near zero, okay? You don't have to move much to move up by thousands of percent, but then after the easy bit is done, you end up with the hard work of whatever it is finding its place in the market, okay? So this new thing, this new shiny thing, it was like, it was the new thing. It was everybody, was getting excited. There was stories of people making their millions and retiring to some nice Caribbean island somewhere. Everybody got very, very excited. So this thing went sort of vertical, effectively. You can see visually that there was a very, very rapid rise all the way up until around about 2013. So for the first couple of years. And then after that, and in fact, really from 2011, you could say 11, 12, 13, things started to get a little bit more normal, okay? And Bitcoin priced in US dollars, or Bitcoin's purchasing power, more importantly, began to sort of stabilize, okay? So I'm seeing this in two phases, and I'll highlight those phases for you. The first phase is this one here, okay, where Bitcoin really was introduced to the market. It was like its introductory phase. And then the next phase took over, which was this phase here, where things got a little bit more, as I say, normal. So the question now is, can we accelerate upwards and onto new all-time highs, or are we going to struggle in whatever way and possibly even move lower? Okay, that's a simple question. And I'm going to try and tell you how we can determine some weight of evidence for that. Now, the first thing I can do is put some lines on the chart, and that is going to start introducing my views and opinions. So before I do that, I want to show you these two moving averages and this technical indicator, the Ichimoku cloud. Neither of those are my opinion, they are fact. The red line is the 12-month moving average, fact. The green line is the 4-year moving average, fact. And I've chosen 4 years because Bitcoin does appear to have a 4-year cycle for whatever reason, okay? I'm not going to say it's because of the halving, because gold has a 4-year cycle and gold doesn't have a halving. Stock markets have cycles and they don't have halvings, okay? So cyclical behavior is not anything unusual and does not necessarily mean it's tied to the halvings. It might be, okay? But I'm not introducing any bias here. I'm just leaving that open as an open question, okay? And we're sticking to the facts, the known facts. Okay, so first thing to notice is that throughout its first cycle and its second cycle, well, I suppose you could say it's second and third cycle really, because there's a cycle in here. So, but from point in time where we had a 4-year moving average, it supported the price. And then later on in this bear market here in 2019 and again in 2020, the 4-year average moving average supported the price. Now, something different has happened here. We've broken down below the 4-year moving average. We moved back above it and we're down back below it. Now, the 4-year moving average is 27,336 on this particular exchange. It's the all-time crypto history feed on TradingView. And we're currently sitting at 25,797. So we are below the 4-year moving average. I can zoom in a little bit on that for you, and you can see quite clearly we are some distance below the 4-year moving average. That's a fact. And this period of being below the 4-year moving average is something new to Bitcoin. The 12-month moving average is also below the 4-year moving average. That is something new to Bitcoin, not happened before. And we are also clearly below the Ichimoku cloud, which is a technical indicator that acts as support and resistance. Okay, and you can see we're trying to break through it here at the moment, but it's acting as effective resistance, trapping the price. All of those things are facts. Now, something else that I can do here is I can put on some more technical indicators. So I'll do that for you. Okay, so what I'm putting on here is the distance from 3-year moving average indicator. That's this one here, and I'll just expand it so that you can see. Now, one thing you can notice straight away is the loss of momentum in the distance from 3-year moving average. Each time we get a bull cycle, the price is stretching less and less above the 3-year moving average. That is a clear loss of momentum, and that is not bullish. Okay, we'll now look at the ratio of Bitcoin to the S&P, and the green line is the 3-year moving average. So you can see, again, clear loss of momentum. We are underperforming the stock market. We are below the 4-year moving average. That is not bullish, okay? These are not bullish things. And that's a fact. You know, it's not my opinion. It's a fact that it is not bullish to be underperforming the stock market below the 3-year moving average, okay? And now we've got the rate of change indicator. This is the 7-year rate of change. And you can see incredible highs at the beginning. I can actually reduce this down to 4-year rate of change. Let's change it to the 48-month rate of change because of that 4-year cycle. Okay, so this is the 48-month rate of change. And you can see, I'm going to have to zoom right in to get some kind of granularity here. Let me get right in on that rate of change there, because I want you to see just how it's performing. Okay, here we go. I'm zooming right in now on that rate of change over the last few years. So you can see, again, a loss of momentum on the rate of change. And if it were to fall below the 0 line, and we're very, very close to the 0 line now, if it fell below the 0 line, that would mean for the first time in history, anyone holding Bitcoin for 4 years would be in a loss. The rate of change would be negative. And you can see that anyone holding Bitcoin over the last few years has made very, very little in the way of gains. Okay, the huge gains were much earlier on in Bitcoin's history, of course. So those indicators, none of them are bullish at the moment. And those are facts. That's not my opinion. Those are just simple scientific facts. Okay, let's get rid of those indicators now and go back to the chart. And I'll start now to put on some support lines. So the support from the launch went all the way up here like this. Okay, I mean, you could draw a tighter support line in here and it broke down. The next support line goes in here. Okay, touch points here, touch points here, touch point here, and then it broke down. Okay, so that support line is now broken. Okay, now from my point of view, the next most important support line on this chart is in fact a pivot line, and it starts at the high in 2011, starts at that point there, and it runs all the way through to here. And this is the line on the chart that got so much, created so much sort of debate, well, not debate, it wasn't a debate, it created so much backlash by me putting this line on the chart and saying that it was important and relevant, and it was very controversial. Now, just take a step back and ask yourself, is that an important support line? Is it or isn't it? Now, if you're thinking I should start the support line down here, well, fair enough, but the support line there broke a long time ago, and there's nowhere else to anchor it. A support line is only valid if you get at least 3 touch points, and the only place I can put it to get at least 3 touch points is there. You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 touch points, and then it's broken. That line is also broken. It was retested as a resistance line, and it failed. So you've got that line there, the red one, that's failed. You've got that line there, that's the blue one, it's failed. You've got this line here, the black one, and now that's failed. And just like this one here, which was back tested, this one's been back tested and is starting to fail, but there's a difference. The difference is this back test occurred above the Ichimoku cloud. Okay, this cloud structure here. Now we're back testing below the Ichimoku cloud and below a much shallower support and resistance line. Now that means this is more bearish. That's a more bearish back test than this back test here. Let's put on another indicator a lot of people use is the RSI, or the stochastic RSI. This is the monthly stochastic RSI. Okay, now it's hard for me to see this as bullish as well, because we have failed to get as high as the previous peak on the stochastic RSI. And in fact, all of these peaks here, all of these peaks are at the maximum level of 100. Okay, but we've failed to get that high. We've turned down and we've had a bearish cross at the same time as being below the 4-year moving average and below the Ichimoku cloud. So this just is not a bullish picture. I can't, from a scientific, technical analysis, objective point of view, all I'm seeing here is support lines of ever decreasing angle being broken to the downside. And now we've finally done that below the 4-year moving average and the Ichimoku cloud. So if your technical analyst of choice is ignoring this, then I'd have to question their objectivity. And there's another very important line on here, and I've seen this line placed. Okay, let me put a horizontal support and resistance line on here. I've seen this line placed on the chart recently by someone trying to say that Bitcoin is bullish. Well, okay, it is a support and resistance line for this price action since the middle of last year, but it slices right the way through this monthly candle here. And for me, for that reason, it is less important than this one here that I'm about to put on the chart, which is that one there. And in fact, there's a zone of resistance between 31 and 35,000. If I put that at 35,000, okay, and I'll put this one at 31,000. That zone of, and I'm going to get rid of this lower one, that zone in there is the critical overhead horizontal resistance zone. It contains the 4-year moving average. It's just on the underside of the Ichimoku cloud there. If price was to come down and then cross through that zone and through that weak spot in the cloud there, that is where you would turn bullish. For me, the only point at which I'll be bullish on this chart is if and when price passes through there. Until or unless that happens, the technical evidence for me is screaming at me to be cautious, very cautious. And I mean, not only that, this price action just below the black support line there looks very much like a rising wedge, which is breaking down as well. So that is another reason to be very, very cautious on the Bitcoin chart. So that would effectively have made Bitcoin a big bearish rising wedge over the last several years, because this here looks like a rising wedge to me, and it depends on which excuse me, which exchange you do your analysis on, because on some exchanges this rising wedge is more marked than on others because of the exact price that we peaked at. But this, I think with all of them, this spot here qualifies for me as a false breakout, and the interpretation for me is most likely at the moment that this is some form of overall bearish rising wedge. I mean, does that mean that price is going to go to zero? No, it doesn't. What it means is that the price is going to fall until it finds a support level. There's a support level, it's a very strong support level in and around 10 to 12,000. And for me, that is quite a likely outcome. Something like that is quite a likely outcome, and probably the most likely outcome for me. I'd like to see Bitcoin breaking out and moving to new all-time highs. Of course I would. There is a possibility, which cannot be denied from a scientific and technical point of view, that this could move lower. It certainly could move much lower because of the extent and the time that this pattern has been building out over. Been building out over a long period of time. Large patterns lead to large moves. So that's a very well-known truism, very well-known kind of fact. You know, the bigger it is, the harder it falls. But that is a possibility that can't be ruled out. It can only be ruled out if and when we actually break above this 31 to 35,000 zone, because even by going back up to there, you could still be rejected and move down here. So what I'm saying is that there are a number of possible outcomes for Bitcoin. I know that most of you watching this are thinking it's going to be something like this, or perhaps not quite as high as that, but I don't know, something like that. But to expect it to just go straight up like that now is, I think, unrealistic. So some form of pullback in here is very likely. But of course, once you start dropping like that, you have created a bearish rising wedge, because the price action has confirmed it as a bearish rising wedge. If we were to move down back to even just sort of 16,000, this would look very, very structurally weak. And, you know, that's all I'm saying. No more, no less. I'm just saying that the technical analysis, even if I take all of my lines off that chart and I remove all the drawings that I've just put on, that pattern is a weak pattern, purely from the loss of momentum point of view and the point of view of where the Ichimoku cloud, the 12-month and the 4-year moving averages are. And I'll go back to what I said right at the start. Those are not my opinions. Those are simple facts. Those lines are there, not because I've drawn them there, but because they are there, the 4-year moving average and the Ichimoku cloud. So please bear all that in mind before you write off any technical analysis that I've put out there, because I'm taking all of this weight of evidence into account. I'm not just randomly drawing straight lines on a chart, as some people have suggested. Okay, thanks for watching that. I'll continue writing the rest of the article, and I hope that helps. Thanks for watching and listening. Bye-bye.